Yes, we're consumed by social unrest and the gruesome pictures from around the nation. We're shocked that the peaceful protesters have created an opening for looters, and the police sometimes can't tell the difference between the two. Even from a purely business perspective, you'd think people smashing up major retail destinations like the flagship Macy's in Herald Square would be bad for the stock market, right? Yet every time the market looks like it's about to get clocked, we get a stay of execution. Witness today's action. Dow gained 268 points. S&P climbed 0.82%. Nasdaq advanced 0.59%. Last night, after President Trump's fire and brimstone law and order speech, our futures plummeted. A declaration of war, replete with the threatened deployment of the U.S. Army. That's not their job. They're war fighters. Makes you want to sell stocks for certain, and those futures looked ugly. And all those images of looting sure didn't help. The future stayed soft. Then I got up at 3:15 a.m. and inspect the pre-carnage. The futures had rallied to you. An hour and a half later, the futures were up nicely. You know what counteracted the paroxysms of pain? A 4% rally in the German stock market, with several of their bourses not far behind. Yes, we actually sank to the tune of the German market. Yep, I've been watching the rest of the world. Many of these countries are flashing bright green now. We don't talk about it enough. I am saying that the possibility of an aggressive stimulus in Europe, including the penny-pinching German government, where they seem to be falling all over themselves to resurrect their economy by any means necessary, is moving our stock market. I'm talking about the incredible turn in China, which just had an astounding 11% gain in auto sales. That's gigantic for the world's economies. Surge in iron. How about copper? The latter, which 11-week high. That's huge because copper is a tremendous barometer of global economic activity. The biggest market in the world for copper is China. If the rest of the world's in better shape, well, that is fantastic news for our companies that do lots of business overseas. And you know what? It absolutely overshadows what's happening here.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.